Investor Connect podcast program. This is Tomas Martunas. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Tomas Martunas with Investor Connect. Today we're here with Tomas Martunas of Iron Wolf Capital. Thomas, thank you for joining us.
Yeah, my pleasure as well.
So what was your background before investing in early stage companies? What did you do before this project?
Yeah, so before joining and founding with another colleague, Iron Wolf Capital, my career started in Swedbank. So in 12 years, I was in banking, doing different things, implementing internet bank, mobile banking, working with multinational clients, leaning the bank with McKinsey, turning it to the client-centric organization. Then in 2009, I was managing 9.3 billion through the cycle, the corporate lending portfolio. So it was very interesting times. And I think Swedbank did quite well after the crisis. Then at the late days being in the management, we started getting involved in the social responsibility projects, junior achievements, going to the schools. And this is how I started engaging in early stage startups. So I invested in private kindergarten networks. I founded the mobile entertainment company. And this is how it started. And we, with another guys, founded the mobile social marketplace in Nigeria, which became number one there. And eventually I left the bank to run app development company. We did it for 3 years. Then I understood that I want the product company rather than service company. So we sold it and we spinned off one startup, which was related with the B2B SaaS, the field management system. And I went to the family office, the Goldfish Fund, investing in different verticals. We invested in one of the biggest ecommerces here in Baltics and Poland. Now they're doing 300 million turnover in euros. And then we invested in food marketplace. We invested in cashback app like Ibotta in US, in South Africa. We invested in PowerMe in Kenya. So it was very interesting times there. Then during the Bitcoin starting boom, we did few investments in crypto-related projects. And then eventually we got the mandate from EBRD and Invega to launch the Iron Wolf Capital with their colleagues. And here we are.
Well, it sounds like you had a diverse range of sectors you've invested in and seen quite a bit out there. For those who are investors, what's your advice for them about investing in startups? What should they keep in mind before they enter this sector?
I would say that from the startup's point of view, what sometimes I miss client centricity. I see some of the founders or the group who are so in love in the product, but then you see the value proposition. It's like a lot of nice words about the product, but not so much thinking about what is the value creation for the client. And this starts sometimes even from the UX and design. Sometimes it is from the product value proposition in general. So I think that client first, this is really important. The second thing is that the wide definition of this is my target market, everyone from 15 to 35 in US, it's not enough. I think that having the digital persona well described, and it's really important for the startup to focus. And then they focus, they need to have the mentality of being number one. So number one in that micro segment, number one in their small niche, number one in their market. So this mentality needs to be in the head of the founders. So this is maybe just a few advices from my side, yeah.
No, that's great. Know your customer well and serve them well. It sounds like a good advice there. So you've seen investing for some time now and seen many sectors. How do you see the early stage tech sector evolving at this point? You mentioned Bitcoin, blockchain, crypto, and there's many things that are coming into the space now, but how do you see the industry emerging?
I would say that now versus probably 5 years ago, to found a startup, sometimes with the MVP and to verify your idea, if the customers could get love into it, you don't need even programming skills, I would say. So the entrance barrier to start the startup became very low, which means that competition is really much coming in. So if back all the days, I would say it was enough to have maybe great product. Now it's really also about sales and marketing and having an understanding of how to reach the user base, how to use the virality. So I think that for the startups now, which are evolving, It's really important to move very fast. In terms of industries, what's, I would say, under the radar of mobilization is fintech, insurtech, meaning the industries which are governed by the governance, regulated. So those industries now, because other industries already are eaten by the marketplaces, now it's a time for those industries to be changed. So I think that EV and cars will be changing, insurtech, fintech, legal tech, and even prop tech. So I think all those industries which were sitting for quite a while, not being disrupted by the technology, now they're going to face the disruption.
Great. So what is the investment thesis for your fund at Iron Wolf? What are you basing your investment decisions on?
I would say for us, then we invest, we think from that angle. Yeah. We first look that it should be a strong founders team, because I think about early stage investing is, first of all, is about the founders team. Their dedication, their energy level, the way they talk, the way they communicate between themselves. So if to look, then we invest, what we try, we say we never invest in dots, we invest in lines. So we try to cooperate with their accelerators, angel networks, start monitoring the startups from as early as we can. And we see the progress, we see how fast they move, how fast they react to our advisors or to our advices, to our indications, maybe worth talking with some of the advisors. So we just see how people move. Second thing, of course, is the market size and their products. Do they have the USP? And do they have the ambition to become, I don't know, number one, number two, number three, the worst? Because in our thinking that if you becoming, I don't know, number 15 somewhere, of course, there is a possibility for you to do the trade sale, because early stage investor or the fund like us, you still think from the first day about the exit. So it's very important to see the ambition, and you understand that if you are number one or number two, so the multiplier which you're going to get for and the bidders for your startup, you're going to get eventually much more than just simple number, whatever, in your industry, in your niche. So this is important, USP and the size, of course, of the industry. Yeah.
So can you call out a couple of startups maybe that you funded that fit that thesis and are a good example?
Yeah. In this fund, let's say the first investment which we announced was Get Miller. So they are a smart blender, which they did, there are a few patents related, meaning in the kitchen surface, they did it that it can be blended the same as now induction can heat. So if you'll decide that you want mashed potatoes, you're going to put it and you're going to from the app just program it that you want potatoes to be mashed and they're going to be mashed. And there is like surfaces that just touch each other. And because of the magnetism effect, it starts blending. Yeah. So first of all, they're going to have two consumer product, the healthy blender with an app. We believe that it can compete with the Blended Tech, which is quite big company, and with others. So for how long? We believe like for 12 months, you're probably going to have the USP. Later, definitely somebody will copy. But at the same time, it's protected by two different patents. So this is just an example of EOT, the big market, which is booming, the healthy lifestyle, which is booming, yeah, and with having the patents and the product which have the USP and investing in it.
So let's talk about the challenges in the early stage world today. There's regulatory challenges. You talked about healthcare and fintech and other spaces starting to move. They're regulated, but they're now starting to change. And of course, that's chaos and opportunity at the same time. And then there's market challenges where there's lots of competition. You talked about how there used to be just a few competitors, but the barrier to entry has gone down in so many places that there's many competitors. So what do you see as the biggest challenge coming up in the next 5 years for early stage companies? Do you think it's going to be navigating these changing regulations, or do you think it's going to be the increased competition coming in because everyone has the same tools?
Yeah, so I think that it depends on your tools, yeah, how fast client can switch from one to another. Yeah, because I think a lot of startups do underestimate that. Because if the market is not penetrated, then you're going to penetrate. If your product is so easy to be switched, let's give an example, Uber or Grab, with one click I can check one price, with another click I can check another price. and timing of my cab arriving, and I just order. Just simple as that, yeah. So if it is like that, then to switch on loyalty, I think in this generation there is not much loyalty. Yeah, there is a loyalty for the good user experience, but not for the brand, and this is what has been changed. Yeah, but if you have, I don't know, some inventory management system where you do have e-commerce shop and you have, I don't know, 10,000 of goods inserted, and with all your client history, you understand that migration of from one platform to another, it's a headache, yeah, and it's really complicated. So I would say that, yeah, startups always have the challenge of that product market fit. I think also have a challenge of understanding is the problem is so painful as, I don't know, your teeth. And then you really need to go to the doctor. So you really need to get the solution and to buy it. But I would say the biggest challenges that nobody talks about is actually psychological challenges. Yeah. Usually when startup is coming, there is like two ways of looking. We see the founders who are very down to earth, meaning their plans doesn't look too ambitious, but they, in their lives, they say that this makes me more comfortable than I exceed my plans. Yeah. And I rather plan in the standard way, but not in the dream way. And there are other startups who draw the plans being unicorns in year 3. So eventually you have, as from the fund management, you need to be ready, and the startup that the expectations usually are not met. And startups usually need twice as money as they asked from the very beginning and twice as much time as they estimated from the very beginning. So that relationship, how it goes within the founders team, between the founders team and the fund, it's really important. How you do they aware of it? You aware of it? How you're going to handle that situation? It's the harder ones. So this is very important because I would say the shareholders' conflicts usually breaks the companies. And it's really important them to be solved or to talk what happened, because it will happen in most of the cases, I would say.
Great. So there's a lot of opportunities out there, many sectors and applications and subsectors to pursue. If you had to pick 2 or 3 that you think are some of the better ones to pursue today, which 2 to 3 would you choose?
I would say that things which are related with impact for the human, which helps their life getting better, meaning like healthy lifestyle, the startups which addressing that area is touching something which is important for the human being. So I think it's really the area which is interesting to be tapped. I think one of the very regulated areas which really being addressed by artificial intelligence solution, others are medtech. Yeah, so I think that this sector will go through the changes. And I would say that the third is really which disrupting a lot of things. It's artificial intelligence and machine learning. So those areas, it's not like an industry, I would say, but it's rather the thing which gonna be impacting each of the industries and making them more efficient. So those 3 maybe would be the ones which I would say worth looking more deeply and watching the startups coming out of that.
Well, very good. Those are 3 very good ones as well. And so in the last few minutes that we have here, what else should we cover that we haven't?
Hard to tell. I would say that for the listeners who are from US market, maybe what's worth thinking is that there are maybe on the wider level, few trends are coming. Is one of the whole Asia, which is booming, and the venture capital industry is very much developed. And maybe it becoming more developed than the US, and they have also as much unicorns as the US. The Europe market, which is catching up quite fast. So I would say it's more and more hubs of the startups in different parts of the world are pumping up. So I think which is important, and for the founders and for the investors, is to have the strength to cross the borders, because it's really easy to invest in something which is very close. Yeah. But for us to get away out of comfort zone, and because, another country, it's another jurisdiction, much more risks, much less network. So, but to get out of the comfort zone, if you operate in the risk capital, I think it's really important, worth doing exercise in generally. So, I would recommend for everyone to take a look at Baltics, in Europe, and all other different hubs which are pumping up from Asia to Europe or to the US. Because I think it's more and more people coming in and more and more opportunities for the startups to get funded and run much more faster.
I agree. It's coming more and more. VC is going further afield, and it's a great opportunity for the investor as well. So how best for the listeners to get back in touch with you?
Yeah, I think in the LinkedIn profile, there are my contacts, the email and the phone. So feel free to ping the message to me, to write an email, or just simple call by the old-fashioned way, or using new technologies, messengers, WhatsApp, Skype, Viber, Telegram, or anything. So you will find me there.
Well, great. We'll put those in the show notes. And thank you for taking time to join us today, and hope to have you back for a follow-up soon.
Yeah, thank you much. It was a pleasure to talk. Wish you a good day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Tomas Martunas is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.